Welcome to our first coffee talk from our new location at Presilium Private Wealth. Thank you all of you for joining us here. We promise you that we will continue to work hard every day to give you an amazing experience and help you to reach all of your financial goals. As usual, we'll try to keep this to about 5 to 10 minutes and are always happy to answer any additional questions you may have for us.
Now, as many of you know, the market has been incredibly volatile thus far in 2022. We've seen large daily reactions to the war in Ukraine, the US Federal Reserve increasing interest rates and corporate earnings, with the S&P 500 and the Nasdaq down 13% and 22% respectively thus far. This has actually been the worst first 4 months for the S&P 500 since 1939.
However, we were very well prepared and well positioned to take advantage of this volatility, much like we've been in the past. The time right after a major market decline has historically been the best time to add to stocks. We've already rebalanced 8 times in the first 4 months of this year in order to take advantage of that volatility. Brook, what does this volatility mean for our clients and how have we been preparing for it?
What this volatility means for our clients, Jerry, is exactly what it's meant in the past. It means that we will continue to be proactive with our long-term plan of adding to stock during market declines to take advantage of the volatility and give our clients the opportunity to buy more shares in the many great companies that are temporarily under pressure. Now, in terms of preparation, I think what comes to mind during times like this to me is the word discipline. While being a disciplined investor and sticking to your investment strategy is more obviously relevant during times of volatility, it can also be easy to get carried away and lose sight of that approach when things are going well. In some cases, the market seems like it may just go up forever. So over the past few years, this has been one of the most important aspects to our approach, in my opinion. By staying disciplined in selling a portion of the companies that had done exceptionally well and had now become relatively much more expensive to their peers, we kept ourselves positioned well, not just to weather the volatility, but to also take advantage of the great buying opportunities that we now have before us this year. So if instead we had allowed ourselves to get carried away, piling into the hottest sector or chasing the latest investment craze, we would not have been in the position that we were heading into this year. And therefore, we would have been unable to take advantage of the many buying opportunities that we've had already, as Jerry mentioned earlier. So whether the market's performing well for any number of reasons or experiencing ups and downs due to the uncertainty of the Federal Reserve increasing interest rates, it's really important to maintain that disciplined long-term mindset throughout. And Jerry, while we're on the topic of the Federal Reserve and increasing interest rates, how has the market historically performed during times like that?
Yeah, thanks, Brook. That's really important. The Federal Reserve just began to raise interest rates earlier this year, so this is something that we studied very carefully. They've had 6 cycles of rising interest rates over the past 40 years, and the S&P 500 has been positive during every single one. In fact, during these times, the market has had an average annualized return of 9.5%. So there is reason to be optimistic.
That's fantastic. And yeah, Jerry, I think that's a great point too, because there isn't always seemingly reasons to be optimistic during times like we're seeing during months like we saw in April. From a market perspective, are there any other reasons or indicators to feel optimistic at a time like this, in your opinion?
Yes, absolutely. 2 other really important ones. Dividends and stock buybacks are at the highest that they've ever been in history. Companies clearly feel comfortable not only paying out cash to investors in the form of dividends, but also using excess cash to buy back their own shares. We continue to be very comfortable with our rebalancing strategy of also adding to stock during an opportunity like this. And thank you for joining us today for our first coffee talk at Presilium Private Wealth. I'm sure this will be the first of many. Please feel free to call, text, or email us anytime with questions. We love working with you and look forward to talking with you soon. Thank you and have a great day.